we are not mission driven in our philosophy. We are moving forward, we are thinking big, but we are executing our strategy in a disciplined fashion. Pretty much all the investments that we make have impact. And the reason we chose to invest in them was that they have done something nobody else has done. Many of our portfolio companies have very deep impact in society or business. We are financial investors. Our goal is to invest to maximize the return on capital because we have fiduciary responsibility toward our investors. While we are doing that, if we can have impact on society, by all means, we are very delighted to do that.
So welcome everybody. We are here with Afzal Tarar from Quartus Capital Partners again. Happy to have you here, fresh from closing Fund 1 and gearing up for Fund 2. So today, thanks for getting out some time in this hot Miami weather. So great to have you here.
Happy to be here with you, Gabriela. Always a pleasure.
Thank you. Okay, let's start. You've said, and you began your career, or this all began in Beijing, at your dorm in the mid-'80s. Let us understand that picture way back then. What sparked?
Well, I think we have spoken at some length about my background.
Yes.
But today we are gonna just talk about a short summary of the past 30 plus years. So as you pointed out, it started in Beijing at Tsinghua University, which is broadly considered an MIT of China. For some of the audience, as a reference, so the Chinese president, Xi Jinping, is also an alum of Tsinghua University, and so are many famous Chinese leaders. But I was not famous, I was just an international student. And I had the privilege of studying computer science, computer engineering, and the earlier form of AI. I mean, I could not have imagined, dreamed that I would be doing that, but I did that. And I didn't even think about that AI would be an important field down there. Perhaps there was an inkling that I had, but it was not very conscious, kind of calculated decision that I'm going to study AI because AI is going to be big 20, 30, 40 years later. So here we are.
Good. So Fund 1 just finalized at close to 55 million. Top quartile results within Cambridge benchmarks. What's the one decision that most drove you that outperformance?
So just a minor
Tweak?
editing or tweak. The Fund 1 final closing was just a bit north of $50 million. It was important for us to achieve that kind of a milestone for our first fund for this strategy. So we were very delighted that we were able to do that. And you're right, our Fund 1 has been in the top quartile, upper quartile for better part of last 2+ years. There may be a quarter or two where we missed by a bit, but we were always near upper quartile or in top quartile for 2+ years. So that is another a major milestone or achievement that we are happy to celebrate.
Talk about what made that outperformance? What drove that performance?
It may sound like a tongue-in-cheek when I say that's a culmination of our combined knowledge and experience of 20, 30 years each. So it's not just one thing that led to all these outcomes. But there were a few things that we did as part of building the firm that contributed to where we are today. And that is a very disciplined, well thought out plan, strategy, and perhaps most importantly, values and philosophy of the firm. that led us to where we are. We didn't want to just build a fund. We wanted to build a firm. And so to build a firm, we have to have the proper roots, foundations, and you and your team helped us significantly in setting those up over the last a year plus.
That timing was amazing when you came to us.
Yes.
It's like we have a tiny issue, and that issue turned out to be not the driver. The driver was the firm that you wanted to build.
Correct. So I think the thought process that led to those discussions with you and Alejandra were a result of multiple years of turning these things over and over and trying to figure out what is the right way, what's the right timing to do what we did. And it's not a done project. It's a nearly complete, but it's an ongoing effort to continue to build the brand, the name recognition, the values, the philosophy that drives us, right? But we are moving forward. We are thinking big, but we are executing our strategy in a disciplined fashion.
Talk to me about that thought process that went through the creation of the firm. More like, I've seen you at play. I've seen you get the top frameworks, the top ideas come into play and make them happen. I've seen that excitement in your face when you're either reaching for investors or having these meetings. What was going on through your mind to create that firm? What was exciting for you?
So the idea was, as we discussed in a lot of detail in the prior conversations, was really combining three, perhaps more, levers of growth, levers of innovation, levers of value creation. And those were knowledge and experience in management consulting, in operations. So we broadly call it operator DNA. Then you add that finance, knowledge and experience of finance. The third perhaps was the global experience, living and working in the US, living and working in Asia, and bringing the relationships. So it's really the levers of capital, levers of consulting and operations, lever of relationships. That's really the culmination of, or that resulted into the culmination of Quartus Capital Partners today.
When we talk about AI, and we spoke at length last time, but that 30-second test for separating the hype from what's happening, what's your take on this?
I was thinking of this question from different angles, but I think the angle that makes the clearest sense to many investors is the impact that some of those AI-based, AI-native companies are having on society or on business. Are they addressing or solving some complex problems? How deep is their integration of AI? Are they using AI properly and effectively? So this is the layers of knowledge and experience that we discover over time. But if they're addressing a complex problem and they have been successful at this, that in itself is a very big initial test.
Okay, and tell me about let's ground that in terms of the portfolio companies that we have at Quartus Capital Partners. UHealth, how did that pass through the test? How did it become part of your portfolio companies? How is it performing? Talk about the one company that you want to highlight.
So I think you were perhaps pointing at UMethod Health.
Sorry.
So UMethod Health is a Raleigh-Durham-based company. When we met them, they had been around for 10 years. That was 2+ years ago. And over the course of 10 years, 2 founders and their team have developed the company to the stage they were at. And the reason we chose to invest in them was that they have done something, according to our analysis, nobody else has done. And this is creating a very large, complex, what they call large medical model, LMM versus LLM,
right.
LMM. And this LMM was strictly based on science and facts. There was no hallucination. There was no projection or predicting. It was based on the science. Now, how do we know that is the case? Because out of those 10 years, Quest Diagnostics, which is one of the largest publicly listed companies on New York Stock Exchange, they studied UMethod Health for 4 years, ran 10,000 plus cases using the software, and they have, I believe, 50 plus medical doctors on their committee that signed off on it. So our investment in this company was based on their 6+ year worth of development and 4+ years of convincing Quest to become their commercial client. So once Quest became their commercial partner and client, that's the only, then and only then we agreed to invest in the company.
Okay, so it was after that.
So that tells you the level of thinking that we put into making investments.
Rigorous and as well as projecting
Yes.
the growth.
And we are usually not the first one. Mm-hmm. We never want to be the first investor.
Okay.
So it's comparing that to early stage investors. Mm-hmm. We don't invest on hunch. We invest based on detail, understanding, and analysis of the company's technology, their commercial model, and most importantly, perhaps, their commercial success, some commercial success.
Talk about other portfolio companies that you have in the Fund 1.
We have quite few portfolio companies that we talk often about. The other company we talk about often is NeuroSync. The company came out of Stanford Medical School and Stanford Sports. As you may recall, many of us have seen doctor doing the finger test in front of our eyes, saying, can you follow my finger? And we follow the doctor's finger. That is like, I don't know how many 100 years old method to see if a person, their eyeball can follow a object. Mm-hmm. Move forward to present day, NeuroSync is using VR goggles to show a dot or other object on the screen and asking the patient or a person to follow the dot. And then they have high-speed cameras on both sides, taking image of your eyeball as you're following the dot. And once they have that, they run it through an AI model to see how accurately your eye followed the images on the screen. Based on that, they can deduce, or project that patient has ADHD or they have traumatic brain injury, which happens among children, sports people, and first responders. That is the height of AI application. And they are solving some very complex problem across the globe, not just in the US. Just to give you a reference point, in the UK, in a public health system, I believe, I read somewhere, the waiting time to get an ADHD appointment with a doctor is somewhere 9 months to a year. With this kind of technology or device, you can do that at home or you can do it at a remote clinic. It's a small kit that sports teams, schools, or military units can carry with them, during sporting events or children events or military missions.
That's amazing. And that's a purpose-driven, we might say, investment or part of the portfolio that you're making a big game changer for humanity as well.
Yes. So we stress, not because we don't like mission driven, we are not mission driven in our philosophy, but pretty much all the investments that we make have impact. So impact is the outcome of the investment. They are not built into our objective in the front. So see the difference? So we don't look at these companies through the lens of
Purpose.
or impact, but we look at these companies through the lens of how effective they are using the technology to solve something. So a lot of the impact is on the tail end or as an output. It's not part of our input. It just so happened that many of our portfolio companies have very deep impact in society or business.
Is that correlation then? Higher impact, higher ARR, or that way?
Again, we don't correlate them.
Okay.
We don't tie them together. We are financial investors. Our goal is to invest to maximize the return on capital because we have fiduciary responsibility toward our investors. While we are doing that, if we can have impact on society, by all means, we are very delighted to do that.
Any particular on the fund one, the successful companies that you have in the portfolio, any type of, aside from the impact, any type of KPI that those on the fund one are performing better and they're trailing up to fund two as well?
So, great question. So, as part of our fund two, which we are going to discuss, we have one bucket or sleeve, and that sleeve is to do follow-on or additional investment in some companies from our Fund 1 portfolio. Today, we think there may be 4 or 5 such companies.
Okay.
And those companies happen to be also, one, growing the fastest, or they have significant potential for growing very big.
Okay. Okay. And forward-looking, that we jumped into Fund 2, what are the targets for Fund 2? Anything that we can raise or activate? I know, like you were saying, some companies have soft-circled, have come into from Fund 1 to Fund 2. But perhaps maybe what are you doing differently this time?
We are in the process of launching our Fund 2. And we will put our standard disclaimer in front of this video because the Fund 2 target is $150 million. We already have $60+ million in verbal or soft commitments. So we are very happy with that. We expect we will have initial closing sometime in third quarter or latest in fourth quarter this year. The Fund 1 and Fund 2 are similar in broad sense, but Fund 2 has some differences. One is its portfolio is going to look different. So in its portfolio, we've been contemplating we'll have 3 sleeves or 3 buckets. First one bucket is one we just briefly discussed, and that is investing additional capital or make follow-on investments in select few Fund 1 portfolio companies. That's number one. Number 2 is the brand new companies that we are investing from Fund 2. And these brand new companies will be a bit more mature than our Fund 1 companies at that level. What does it mean is we are going to move the guidepost on a revenue per year to close to $5 million. So companies will be more mature relative to how companies were chosen for Fund 1. In that bucket, we will have probably 8 or so new companies. We have a very deep pipeline. We have already chosen few of those companies. We are in discussion with A few of them, we might enter into term sheet with them in the coming few weeks and months. Third bucket, which we are very excited to talk about as well, will be the smallest bucket, where we will put up to 20% of the committed capital in secondary transactions. So basically investing in 2 or more companies that are pre-IPO or pre-exit. What does that mean is that there is a clear indication from the management or the investors that that company or those companies are going to have some kind of exit within, I would say, a year or 2 years. And that is a new thing we're adding. And you might ask why. That will help us accelerate some liquidity for the investors.
Okay.
Also will reduce further the downside risk for the portfolio, right? Mm-hmm. So those are the objective of doing Fund 2 with 3 distinct sleeves, so to speak.
You know what? We haven't celebrated your Fund 1 closing. It was an amazing experience. Was it just recently you published that you closed the fund? What are once you closed it, what's your biggest takeaways from top 3 or top 5 takeaways from that fund? Because it has been very successful. And congrats. This is a point to congrats you and the team, because we haven't done that publicly.
I appreciate, and we have not done it privately either. Believe it or not, the celebration of closing the Fund 1 was to start the Fund 2. And so we have not properly celebrated.
We need to celebrate, team.
No, we will. So what we are thinking is for our investors and allocators, we are going to have our first annual general meeting, AGM for short, some point maybe early next year. And we have to figure out how many and who will attend in person and who will attend virtually, but we will make it virtually available to all investors. So that annual general meeting is a part celebration, part reviewing the progress performance of Fund 1. But we can have small private celebration here in Miami at some point in the near future.
You and your partner were builders before investors. Rizwan, we had a lengthy discussion last week. How does that operating DNA show up every day in your fund, in your company?
So our operating DNA shows up in many different ways, sometimes in a very explicit way, sometimes very implicit way. Even if one of us or all of us are not saying a lot of things, I'm usually saying a lot of things all the time, but sometimes my partner Rizwan is very quiet. So there is a powerful, quiet DNA that is at work. So we, Rizwan and I, and other partners, when we are looking at companies, talking to people, we are continuously thinking, if we were to invest in this company, in this team, what are the things we can do to help improve in strategy, finance, technology, operations, brand, marketing, global growth. So we are saying, so do they need a new technology stack? Do they need a better brand? Do they need help with marketing? Should we recommend our friends in Miami to help them? All those things are at play. And we also have learned to say no. We are polite, but we are firm when we say, sorry, we can't do this, or we don't do this because of ABC. We just had this conversation today before I came over to speak with you, talking to somebody saying, oh, I have ABC kind of opportunities. We said we don't do biotech, we don't do life sciences, we don't do consumer products. We have done a medical device in the past. We will not do it again. We are software specialists. We want to focus on software. So that's how our DNA comes out.
But I've seen more than that. I've seen like rigorous, I've seen forward-looking technologies. We mentioned some of them, Dakota and others. You're always in the lookout, super curious as to what is happening, what you can apply. And what I've seen from my end is a very fast adoption of things that are happening if it fits. I've seen boundaries. I've seen decisions of no. I've seen decisions of we should, the road shows that you're going in different cities around the country, around the world. And the way I've seen you, I've seen that operating DNA that is strategy, but applied and rigorous concentration of activities that you've been doing.
So I think the comments that you're making now are about how we manage our internal operations. But when I was speaking earlier, I was talking about how our personal, professional DNA comes to play when we talk to outside world,
right?
Particularly the companies that seek capital from us. Because we are technologists by training and we invest in technology, we believe in technology. So we are always looking for ways we can use technology internally to improve our own business, enhance our own business. I can spend hours talking about the technology we're implementing right now. How many tens of thousands of contacts we are uploading in our databases, how we are cleansing our CRM and IRM databases, how we are plugging new tools to improve.
That's Quartus Capital Partners at work.
Yes. So that's our internal, our kind of operator and DNA at work internally.
So you walk your talk.
Absolutely.
And that's things I wanted to highlight because I've seen the inside, I've seen the way you work with a portfolio company. So I see boundaries, but I see this hunger or this idea of getting things or working even better every time. So
so I can give you an example of one thing that we are doing. We're implementing Gong, G-O-N-G, Gong. Mm-hmm. A few months ago, I probably might not have even heard of it. But once you hear about it and you do a little bit of research, you realize, oh my gosh, why did I not hear about them sooner? Because they are selling their product and service to some of the world's largest companies. So you name a large company, most likely they are their client. I'm talking about Salesforce. I'm talking about Salesforce is an investor in them as well, probably. I think it's true. And other big firms, Adobe and so forth. Why? Because Gong did something that we think should have been done 5 years ago. And that is getting through all the conversation you're having with your clients on the phone, in email, social media, all being studied together to come up with insights and picking the words, messages, signatures from communications to tell you what your client or investor might be thinking. Mm-hmm. That is gone. And we're implementing that now. And because without that, a lot of that insight is in our heads. And when I say to my partners, I had this meeting with Gabriela and we had a great meeting. We stopped saying that. We had a great meeting. Mm-hmm. We say, what was the outcome from that meeting? Right? Many conversations are good conversations, but was there an output? What was the insight? So we're using Gong to deepen. This is not for sales. It's really to understand our investors, our partners, our portfolio companies better. So data will inform us
Right.
instead of our memory or handwritten notes.
Going back to getting fast forward to today, AI regulation, what's happening? It's tightening. What's the biggest compliance or ethical risk you're foreseeing or underwriting, and how?
Believe it or not, most of the companies that we have, actually all of the companies that we have invested in and the companies that we are looking at, they are playing in a narrower regulated areas. And they are not doing anything that we believe touches any third rail of regulation or risk. They are not playing on the fringe. So they're playing in a kind of a middle of the lane, but solving complex problems. The challenge could be to some of the future companies that they are perhaps not ethical or not effective in managing proprietary or private information, right? But that's not the case today. Most of the companies that we work with, they work with in a protected environment where personally identifiable information is treated with the highest standards.
You talk about like three-layer diligence that you have in terms of the data and the guardrails that you're using in terms of ethics and security, what they're asking for.
Yeah. We have a very complex, I should say comprehensive operational readiness framework. So this has in it product, service, technology, operations, all different elements. And so when we do due diligence on a company, our team looks at the company saying, where are they for each bucket, right?
Okay.
And they have to be at a particular stage in order for us to invest in them. But when it comes to regulatory issues, we make sure that they are properly regulated if it was required. For example, some companies have to have FDA clearance. Some companies have to have FDA approval,
Right.
CE mark, and so forth. In those cases, we confirm that. In some cases, we will ask in-depth questions about how these companies deal with private information about a patient, about a client.
Well, currently, if you're doing any ChatGPT questions in terms of there's no doctor-patient regulation or any type of safety in that space.
We are not investing in any company today, and we don't plan to. Companies that use ChatGPT-like tools to further their business. Now, many people are using ChatGPT, including us, as a tool to assist with some cursory level research, right? I think we are not using, none of our companies are using AGI as a general rule.
Okay. Quick hits. First things that come to mind. What's the tech that you can't live without today?
Honestly, Gong.
Gong.
Yeah, so while we're implementing, I am using it extensively as a tool to manage the timely, effective communication with hundreds and hundreds of people across the globe in an organized fashion. So Gong is my new power tool.
What's the most underrated city for AI talent?
I have a sweet spot for New York City still. And a lot of people think New York City differently. But I think it's a very large place for AI talent. Obviously, Silicon Valley is number one, but New York City has a lot of talented people coming to New York for science and technology. maybe Boston, you know.
Miami, maybe?
Miami is in the list, maybe in the top 5.
All right, all right. What's one book that every founder should read? If you have one, maybe you have 5.
So I read a book on I wrote down the name because I knew that you're going to ask me something like this. It's called Building a Story Brand. So you will appreciate. It's a marketing
book.
So it talks about how important storytelling is for startups, for any startups, for any company. And I recently heard a podcast where a very famous a woman entrepreneur who studies the psychology of selling or fundraising, and she said, people buy stories. People don't buy numbers. So this book is talking about how startups should tell their story. So story about the founders, story of the technology. It's an interesting book. So I don't read a lot of books.
You don't?
No.
What's the one podcast then?
My recent focus has been
Ideas to scale, obviously.
to listen to people about scaling firms, scaling funds, listening to what's happening on the frontier of AI. So I read many different sources. Financial Times, New York Times are my daily list, and I have multiple weekly podcasts that I listen to.
When it's all said and done, what's the impact do you hope that Quartus Capital Partners will have on people's life and on your portfolio companies?
First and foremost, we want to make sure that our investors make good money. That is how we are driven. That is what we are paid and incentivized to do. We have fiduciary duty. So that's one. Number 2, through the growth and success of most, or if not all, of our portfolio companies, is to address some business, societal, health, or other challenges. As we discuss in detail, that's represented in pretty much every company that we have invested in. They're trying to address something in business and society. So there it will be indirect impact, we believe, a significant impact in different arenas, particularly in healthcare.
Is there one thing that I haven't asked that you wanted to get out?
No, I think you covered a lot. We covered a lot. You could ask, or we could discuss what's next. And is there a future lined up behind Fund 2? Are we going to expand our team?
There we go.
We can talk
there
about all
we
these
go.
things. We can talk about all those.
So what's that visibility beyond Fund 2?
Remember, we are building a firm. So it's not about me. It's not about other partners, what we can achieve in the next 10, 20 years. We want to build a firm that next generation of partners can take it to even higher levels, after we retire or after we move on. So we're thinking of, in decades. We're not thinking of in years to build a firm. Obviously, for the next few years, our goal is to raise Fund 2, invest that fund, and once the fund is invested, launch Fund 3 and Fund 4. So we expect to launch a series of these AI funds for foreseeable future. we could also launch some adjacent strategies to around these AI funds.
Do you want to talk about those adjacent or not yet? Too
It's
soon?
too early, but we are right now just focused on harvesting Fund 1 and closing Fund 2, then investing Fund 2, then harvesting Fund 2. Those are our immediate objectives, but after a few years, we'll have plenty of time to think about next.
Any particular talent integration or team integration that you want to highlight at this point?
Among the teams, we are planning to add significantly to our IR team, investor relations.
Okay.
So these are people who can work with me, with other partners to help us raise money, help us manage the relationship with investors. So basically help multiply my time, and that's what we're working on right now.
Well, Al, thank you. I think we're going to have many more conversations like this, successful Fund 1, coming Fund 2. And if you like more information, there's going to be where can you reach and where we should go for quartuscap.com and figure your next move.
Gabriela, thank you very much. It was a pleasure. And I think we should do this more often.